Did you know there are ways to save on land tax? Many property investors think there is nothing they can do about it because land tax is assessed and charged by the state government. Yes, it is true, but there are ways to minimize it legally. Stick around because I'll be sharing practical strategies that could potentially save you thousands. Hi, my name is Eric Lee. I'm a chartered accountant and a real estate agent. I talk about property investment and tax tips to help people build wealth through property investment while saving tax. Let's start off with what is land tax. Land tax is a state-based tax that applies to the land value, not property value, beyond a certain threshold in that specific state. Because it is a state tax, rules and threshold vary state by state. But there are a few common characteristics. First is that your principal place of residence is exempt for land tax. In other words, land tax only applies to investment properties, so don't worry about the land that you are living on. Secondly, land tax applies regardless of whether you earn income from the land. Unlike income tax, which is charged on your earnings, you have to pay land tax if you own a property and the value of the land exceeds the threshold of the state where the property is located, even if you don't earn any income from it. And the third point is that the land tax is assessed on the cumulative land value per owner within a state. Remember, per owner and within a state are the key words, and I'll be explaining more in details towards the end of this video. Let's explore how the land tax applies across different states. This table shows the current basic thresholds for individuals. Keep in mind that each state has a different tiered system with multiple thresholds for different type of ownership structure. But this provides a general idea as a starting point. So, if the value of your land holdings exceeds these numbers, you will be subject to land tax. You may have noticed that Victoria's threshold is significantly lower than other states. This is because of the new land tax threshold introduced from 1st of January 2024. It was introduced to recover from the budget deficit from the COVID-related government spending, and this is a temporary measure, but this will last for 10 years. And this is one of the reasons why property investors left Victoria, and as a result, Melbourne property market has underperformed over the past few years compared to other capital cities. Today's video is not about property market analysis. I will leave this here for now, and let's get back to the main topic. As I said, those thresholds that I just showed you are for individuals, and different thresholds apply to the property ownership by trust and companies. Rather than showing you how the land tax is calculated in every state, I will leave the links for the official land tax calculators for each state in the description below. Alright, now today's highlight. How can we reduce land tax? Land tax may seem unavoidable as each state's SRO, State Revenue Office, assesses and charges property investors. But fortunately, it is not the end of the world, and I will share the ways reducing it now. The first and the simplest strategy is to purchase properties with a partner. Do you remember the two keywords I mentioned earlier? The first one was per owner. Because land tax is assessed per owner basis, splitting ownership with a partner may keep you under the threshold individually. For example, if you buy a property with a land value of $800,000 in Queensland, your land tax liability would be $2,500. But if you buy the same property with split ownership, 50-50 with your partner, no land tax will be payable because the land value for each person is now only $400,000, which is under the threshold. The second strategy is diversifying across states. This is about the other keyword, within a state. Since the land tax is state-based tax, you can access multiple land tax-free thresholds by owning properties in multiple states because the land value of your properties do not get accumulated if properties are located in different states. For example, if you buy a property in New South Wales with a land value of $1 million and another property in Queensland with a land value of $500,000, you will not pay any land tax in this case because both properties' land value are less than each state the threshold. Whereas, if you buy both properties in New South Wales, you have to pay $6,900. This simple diversification can save you thousands of dollars. Isn't that amazing? Third strategy is a bit more advanced, which is using a trust or company structure. If you buy a property in a trust with a corporate trustee or in a company structure, what you are doing is creating a separate legal entity to hold a property. So each legal entity will be able to claim land tax-free thresholds. However, as briefly mentioned earlier, some states have lower or even no threshold for properties owned in trust or companies. So you need to ensure if purchasing properties in trust or company names is actually worth it. In summary, you can save land tax by buying properties in different names in different states. It is simple as that, because this allows you to access land tax-free threshold and possibly lower tax rate multiple times. As you may already know, land tax is just one of many factors you need to consider when investing in properties. As I always say, having a solid, well thought out strategy upfront is key to success in properties investment. I get it. Navigating all the complexity on your own isn't easy. If you can handle everything yourself, that's fantastic. But for most investors, having the right support and expert guidance makes a world of difference. So if you feel needed for support and guidance from an industry expert, please reach out using the contact details in the description below. This is it for today. If you found this video useful, hit the like and subscribe button and also the bell icon so you don't miss out any future updates. And if you have any questions, drop them in the comments below and I'll be happy to answer. See you in the next video. Bye for now.